once we get all these wells up and running, assuming they're all successful, we'll increase our monthly cash flow by almost a factor of five. So it's a really significant step change.
Hello, you're watching Proactive. I'm joined by Nostra Terra Oil and Gas Company CEO Paul Welsh. Paul, very good to speak with you. You've completed a £500,000 fundraise, which has brought new institutional investors on board. Strong support for the fundraise.
Yeah, no, we had fantastic support for the fundraise. We're really happy to put it away. So it was kind of the second phase of a two-phase workover program that we started back in July. So we were happy to get it away yesterday.
I see the shares were issued at a bit of a discount. Could you explain that?
Yeah, unfortunately, it went out at a kind of a bigger discount than I think we would have liked. The shares have been down, the previous week, and they were trading in the neighborhood of like, 0.03, P per share. Then one of our largest investors made a comment on, they were at a conference and they made a comment that they felt the company could go up 2 to 5 times from where it was. That happened on the day that we were doing the raise, and the share price really took off by almost 25%. But we were already in the market raising, and so as a result of that, the share went up on the day that we raised. So the discount was larger than we would have liked. But we're happy to get the money, and we expect that we will retrace those steps relatively quickly. So anyway, it's just an unfortunate timing in the market. The market, as you know, is tricky. So it's difficult to time it, but anyway, that's what happens. That's why the discount was so large.
Fortunate for the new investors, though, Paul. So you
Yes.
talked about the two phases of the workover program. We've chatted about the first phase, which increased your production by 30 barrels of oil per day.
Yeah.
Tell us about how this cash is going to be used to take it forward in the second phase, and what the prospects for that are.
So the second phase is another 5 wells. These wells are a little bit more challenging than the first five, but the flip side is they make a little bit more oil. So we've got 5 more wells we'd like to put on. A lot of these wells need new casing, so we're not drilling new wells. We're just kind of reworking the wells that exist. The first wells averaged about 6 barrels a day net, production, and that doesn't include the water flood, which we'll talk about in a second. These wells are higher than that. They average anywhere between say 6 and 15 barrels a day, depending on the well. So these next 5 wells, we think we'll get it on the order of about 50 barrels plus of increased production, once they're fully up and running. So it's a little bit bigger program. It should have a little bit more bang for the buck than the first one. But again, they're a little more challenging. So, maybe we won't get every one of them done, but that's the magnitude that we're shooting for. The first phase is 30 barrels a day at the moment, but there's another 15 to 30 barrels a day of potential in that first phase that has yet to see. We restarted the water flood in the northern part of the field, and that should deliver another 15 to 30 when it's up fully running. So it'll take between 3 and 6 months to get there. We should start to see the first of those barrels in December, and then it'll increase into the first quarter. So we have a lot of potential in the field at the moment that we yet to see. And the second phase is now going to allow us to essentially really get after, the whole program that we had started back in July.
And of course, this should also significantly boost your revenue and your cash flow going forward, Paul.
It will. So, as we put out in the press release, that 30 barrels a day made us profitable. And, once we get over that profitability hurdle, then because the company had so many tax losses, prior to that, every barrel that we add, we make about $50 in profit. In the case of the Falk area, if we add barrels there, that's kind of higher, like $65. In the main part of the Pine Mills field, we get about $45 to $50 in profit per barrel. So once we get all these wells up and running, assuming they're all successful, we'll increase our monthly cash flow by almost a factor of five. So it's a really significant step change, once we get all this work done. Now we're going to start on the work in beginning of December. It should take us, about 6 weeks to finish it, and then we'll start to see the benefits in the first quarter of how this increased production is going to play out. So it's a great time to be in the share, even though people that got in today, I think hopefully we richly rewarded. So,
Paul, I hope you'll keep us updated on any progress. Thank you very much for speaking with us today.
Thank you. Appreciate your time.
And yours, Paul Welsh. He's the Nostra Terra Oil and Gas Company CEO.